I have seen a lot of traders just starting to trade and then making enormous amounts of money. But is that sustainable? Will they be profitable in the next 5 years? That is the main question. Now, the main reason why a strategy works great for a certain period and then basically stops working, in my personal opinion, is because a trader doesn't have a good enough trading edge and he has too small of a sample size. So yes, you can look at only, let's say, the last years of data or maybe the last 6 months of data, create a strategy around that data, and then you're basically going to have a perfect strategy for those market conditions. And yes, it's going to work for a couple of months. You're going to be making enormous amounts of money, but then once the market conditions switch, you're going to get screwed and you're going to lose all your profits. You're going to become a break-even trader. And that is why I think that online you see a lot of traders making tens of thousands of dollars, hundreds of thousands of dollars, and then basically losing it all, or not losing it all, but just disappearing off the map and just disappearing off of social media because they cannot replicate that sort of success and their strategy starts losing. So that's a big mistake that traders make. They don't have a big enough sample size. They just backtest the last few months, maybe the last year. They have a perfect strategy for those market conditions. And yes, it does work. Yes, you're gonna be making money for a few months, but as I said, sooner or later, the market conditions will switch and you will blow up your accounts and you will become negative. Those traders that have, let's say, a tailored approach, that have a tailored trading edge for a specific market condition, well, they do promise like 20%, 30% returns per month, but long term, it is just not possible to replicate. I mean, you cannot consistently extract 20, 30% from the markets. 10% is very, very high. So 10% per month on average is a very, very high percentage. 20 to 30% per month over, let's say, 5 years, I would say it is absolutely impossible. If you want to look at some consistent results, some real traders, well, DarwinX has a really good leaderboard and the traders on DarwinX have like 10-year track records. So you can really see the percentage that they are making each year. And even they have, let's say, 1 year out of 10 years, which is completely negative. They made like -1 or -2% in the whole year. So that is the realistic side of trading. And social media painted this picture that you can make a lot of money very quickly and that you can consistently extract that money from the markets. Now, this is a partial truth. Yes, you can make a lot of money very quickly if you have that tailored trading edge, but you will lose it all in the next couple of months. So for a few months, you will be profitable, but for the next few months, you will lose it. So what does this mean for you as a beginner trader? Well, if you're just starting to learn to trade, you need to know who you can trust. You need to know how to distinguish between a consistently profitable trader and a trader that just is not making money long term, because there are a lot of traders who have had, let's say, 1 or 2 big months. They have had huge payouts and then they promise you the same returns. They open up a mentorship, but they cannot replicate those results, right? So they basically made a lot of money. They got lucky with their trading edge, but they know they cannot replicate those results consistently. So they open up a new business, let's say a mentorship or something like that, so that they can get the consistent monthly income. All of their income is coming from the mentorships. They have completely stopped trading their account because they know that their trading edge is not robust enough. It cannot survive all the different market conditions. So as a beginner, your best bet is to look at a Myfxbook verified track record or a DarwinX track record, right? So Myfxbook has some great track records. DarwinX the same. So I have seen some traders on DarwinX, as I said, with 10-year track records. If you're just a beginner, those track records will give you a great picture of how much money can you realistically extract from the markets year on year. And guess what? It is much, much smaller than you think. Okay, it is much, much smaller than you think. And you cannot get rich quickly with trading. This is a slow game. Okay, it's a long-term game. We're here for years, not weeks, not months. Again, we're here for 5 years, 10 years, 15 years. We make small, consistent gains and we let the gains compound. And of course, we attract outside investors to increase our capital. So that means if you make 1% per month and you have a lot of capital, that is a lot of profit in a dollar amount, but it is only a 1% gain per month. So again, your goal is to grow the capital and not make more percentage, because that is how the pros do it, that is how the hedge funds do it, and it is a proven formula. If you try to make as much percentage as you can per month, well, you're just gonna blow up your account. If you over risk, you're gonna blow up your account as well, and it's just a very, very bad way to go. So if you want to check out some interesting track records, definitely go to Trader Nick's channel. I think he has a verified track record there. He definitely knows what he's doing. And also I'm going to put a link in the description of a 10-year track record that is traded on darwinex.com, so you can see exactly how much percentage can you make year on year if you're a consistently profitable trader. So for this video, of course, I'm going to show you Myfxbook. The account that I have connected to Myfxbook is from 2022, I believe. So it is like a 3-year track record, and it's going to give you a good picture of what you can expect if you're just starting to learn to trade, or if you're an intermediate trader. If you don't like the results that you're going to see, well, then maybe trading is not for you. And just a heads up, I'm a swing trader. I trade only on the 1-hour chart. I'm a trend trader as well. So as a swing trend trader, my results are not going to be as consistent month on month. My main goal is to find those big trends that happen maybe 2 or 3 times per year, and then extract a lot of percentage from those 2 or 3 months. Rest of the months, yes, they can be a little bit profitable, maybe break even, maybe a bit down. But in those other months, I'm basically testing out the markets. I'm putting in small trades to see if a trend is going to happen. And then, of course, 2 or 3 months of the year, that trend will happen, and I'm going to make a lot of percentage. So here we are on Myfxbook. This is my IC Markets personal account, right? As you can see, so it's a real account, IC Markets, technical, manual. The leverage is 1 to 30, and I use MetaTrader 5 for executing trades. The track record is verified. The trading privileges are verified as well. The live update is not connected for some reason. I don't know what that is, to be honest. And the cashback, I don't know what that is either. But these two are most important. So track record and trading privileges should have a green check, and they do. So here you have the most important statistics. So you have the gain and you have the drawdown. Now the absolute gain, I think, takes it into account all the deposits and the withdrawals. So you should not look at the absolute gain. You should look at this one, the gain, which is plus 51.69%. And this account is starting from the 23rd of March 2021. So this has been running for like 3 or 4 years, which I believe is a pretty good track record. And in the beginning, I did struggle, as you can see, because I was still refining the strategy. I was still building my trading edge for this particular strategy. But then as time went on, I did start to find some nice profitability. Gonna go over the equity curve a bit later. So again, the gain is 51.69% and the drawdown is minus 21.23%. So kind of the ratio of the gain to the drawdown is maybe like 2.2 to 1, something like that. So the gain is like 2.2 or 2.3 times bigger than the drawdown, which I believe again is a good number. In fact, for Darwinex Gold, you need to have a 2.5 ratio between the gain and the drawdown. So I'm very close to that, and I believe with my Darwinex track record, which I started in March of this year, it's gonna have that sort of a ratio, so that should not be a problem. The worst drawdown happened here in 2023, I believe. Yeah, it was 2023. So let's take a look at the equity curve. Again, we started on the 26th of March 2021, went into some drawdown, again still building the edge, and then finally things started to work out in 2022. 2023 January was absolutely massive for me. I had a big month, made plus 60 or plus 70%, something crazy like that. Usually after a big month, you have a big drawdown period, especially if you're like an intermediate trader and you still cannot fully control your, let's say, return to drawdown ratio. So because of overconfidence, okay, so it's all about the psychology. When you get a big month, you tend to overtrade, you tend to take some more shitty setups, you tend to be more aggressive, because in the back of your mind, you're thinking, okay, I have all of this profit and I can be more aggressive with my trades because I can go into a bit more drawdown, right? Because look at the difference between this level and this level right here. It's absolutely massive. And that is what happened to me here. I got overconfident and then I got into a big drawdown of, what was it? 21.23%. it is what it is. Basically, then we continued to the upside in, what was it, September 20th, 2023. And then we started going back up, and then July was a massive month. So July was a similar month to this one. On the top, we were at plus 56.22%, and now also stuck in a bit of a drawdown. But again, I am more experienced now, so I know that overconfidence will play a big part, and I've already seen it happen a little bit, but I have managed to stay on top of my psychology, and I have managed to just keep executing those very, very high probability setups and not overtrade. So yeah, this spike in equity was similar to this one, and it's normal again to have a bit of a drawdown after that. So that is normal to see. That's pretty much the equity curve. Now you may see this and think that this is not very consistent. And I would say in the beginning, yes, it wasn't very consistent, especially here. It was a losing strategy, but again, I was still building my edge, still refining the strategy. From this point on, I would say I really like the results. The drawdowns could be a bit smaller, but again, it's psychology, overconfidence, taking too many shitty setups. So it's all something that I'm improving on every single day and working on every single day. But in the end, the net gain in those past, what is it, like 4 years or 3 years is like plus 51.69%. And I think that is very good. If you compare the hedge funds, their average return is around 10%, and then after the fees you get even less. So if you're beating the hedge funds, and this definitely beat the S&P 500 as well in this trading period, then you're definitely doing something good in my personal opinion. So I'm really happy with my performance here. And again, my goals for the future are to control that drawdown. I want to make the drawdowns smaller. I want to have them more controlled. The big spikes I cannot really influence because it's what the market gives me, right? So there was a good spike here, good spike right here. Here we had a nice spike as well, and end of 2023, and here is another good spike. So around 4 big spikes up in equity when the markets were highly trending. So I cannot control when the markets will be trending. I cannot force trades. I can only follow what the market is telling me. But what I can control is my psychology and over trading. So I can control the size of the drawdowns. Here is a drawdown. Here we have just started to enter a drawdown. Here was a drawdown as well. At the beginning was a drawdown, of course. So that is something I can control. And that is my goal for the future, is to lower those drawdowns and have a better return to drawdown ratio. Again, more than 2.5. That is my goal, because I want to get into Darwinia or Darwin X Gold. I want to get investor capital. And then if we scroll down, you're going to see some other information. Yeah, I'm not really sure what this is, but the equity curve, I would say, is the most important. But these statistics are very nice. So you have the number of trades, which is 299 trades, and you have the profitability. So my win rate in the past 4 years has only been 24%. Now, currently it is better. I'm going to have to say that it is better. It has improved, because at the beginning it was pretty shitty. This is the overall win rate. So it takes into account all the way from March 23rd, 2021. But you can see, even with such a low win rate, and this is a low win rate, 24%, I'm still highly profitable. And that is because my average winner is far bigger than my average loss. See this number? So the average winner is almost 5 times, okay, it's kind of, let's say 4 times bigger than the average loss. So my average risk to reward is 4-1, which is absolutely awesome. So even with a win rate of 24%, if your average risk to reward is 4-1, you're gonna still be profitable, right? It makes sense. Put it in your calculator and you're gonna see what I'm talking about. Longs won 25%, shorts won 22%. So I'm profitable for buys and for sells, which is great to see. I really like to see this statistic. Best trade, worst trade. Again, just compare the best trade to the worst trade. That is exactly what a trend trader does. That is exactly what trend trading is all about. The winners, you wanna track them. You want to make them big, okay? You want to follow that trend. The losses, you want to cut quickly. You want to get out of that market. Average trade length, 8 hours, 25 minutes, classic swing trading. Profit factor, 1.26. Sharp ratio, 0.08. Z-score, not sure what that is. Expectancy, 3.3 pips. And then you have these other statistics if you wanna take a look. One more chart we can take a look at is the drawdown chart. So this displays the maximum drawdown throughout the period. You can see the biggest drawdown was September 20th, 2023. And that was after that big January when I did start to overtrade and take some more shady setups. Normal to see, but this is a really good chart to see for investors to see their maximum potential loss from the past results. And then you also have some other valuable numbers such as the risk of ruin. That is the probability of, let's say, these losses happening, so consecutive losing trades. So there is like a 7.2% chance that of losing 40% of the account, and it will require 56 consecutive losing trades. So that is very interesting to know. Now, I am gonna say these results are not the best. I didn't really have a good result from the beginning, right? I wish I could delete this part, but it is what it is. I'm gonna leave it in. I wish we can only focus from the statistics from, let's say, this part, right? But again, it is what it is. So these statistics are gonna be kind of worse than they really are. So you take from that what you want. And then you have these other numbers, duration, MAE slash MFE. So yeah, with this thing, you can find your optimal stop loss size, I believe. I'm not gonna get into it right here. But I know my good friend Griff really knows this chart and has done a lot of refining using the MAE slash MFE chart. So it's very valuable, very interesting. Let's move on to the final numbers of the Myfxbook. So these are the monthly returns. Starting in 2021, pretty much the whole year was negative. 2022, December should have been positive. I'm not sure why it's negative because I believe I did have some good trades in December, or am I wrong? No, that was in 2023. Yeah, so for 2023 in December, I did make some nice gains, but for some reason it transferred them into 2024. Maybe because I opened a good winning setup in December and closed the trade in January 2024. I think that is the reason. But basically, 2021 negative, 2022 is a bit positive, I believe. Again, I had a very good April. I did pass the FTMO in April, and then I got pretty much kind of break even for the rest of the months. 2023 January was absolutely massive. October was awesome as well. And December was also pretty good. We had a good New Zealand and the Japanese yen trade. And that's normal to see. Look, for me as a trend trader, as a swing trend trader on the 1 hour chart, I'm only gonna get 2 or 3 massive trends per year where I make like plus 10% or around 10% per month. Here it was January, October and December. 22 April was great. August was awesome as well, but I missed out on a lot of the winners, unfortunately. So as far as I remember, August was great and September was awesome as well for 2022. 2024 is the most steady, most consistent year. So some of the percentage that's made here should be in December, but that's okay. So March was good. April was great. June was okay. And July was awesome, right? July was massive. Yeah, July is one of those big trending months. April was pretty good as well. I did have one big missed trade in April on the Aussie US dollar. It is what it is. It's part of the game. But I know Griff and Nico made a lot of percentage in July, more than me. And this kind of fits in with the story of having 2 or 3 massive months in a year. And that's consistent trading. So that is the reality of trading. You will not be making massive percentage like 10% every single month. No, maybe 2 or 3 months per year. Rest of the months are going to be pretty much break even or a little bit of profit, like this, or like this, or like this one. That's what makes trading tough. You need to stick through the drawdowns and you need to wait for those big trends, for those big winners. And you need to have a lot of confidence and you need to trust your trading edge. If you don't trust it, you're gonna quit midway in a drawdown and you're never gonna be a consistently profitable trader. So don't believe anything that you see online. Always ask for a verified track record for any mentor. Every trading mentor should be able to give you at least like 1 year of a verified track record. That's like the minimum. If they don't, that means they're not a real trader, because if they are really consistently profitable, why would they not give you a verified track record? Like it only benefits them, right? It's only a plus. There are no negatives to giving a track record. Only if they make like 2 or 3% per year, then I get it why they don't want to share it. But if they're making plus 10% per year on average, I think there should be no problem to share that track record, and it only benefits them if they are running like a trading community or a trading mentorship. So be safe out there and always ask for a verified track record. And if you click on these months, then you're going to get some more info as well, like which pairs I traded, average holding time, risk to rewards, blah, blah, blah. But this is not that important. It's not a big enough sample size. Look, this is cool as well. It tells you all of the trades. Okay, this is pretty interesting. Yeah, so I'm profitable on almost every single pair except the Aussie US dollar, which is pretty funny. Yeah, I believe I'm negative on the Aussie US dollar. I missed a lot of winners on this pair in the last 3 years. A lot of winners. It is what it is, part of the game. But Aussie JPY likes me for some reason, so I'm very profitable on the Aussie and the JPY. These are the numbers you want to look at, right? The win rate, number of trades, average risk to reward, this gain, and the max drawdown, and the ratio, the return to drawdown ratio. I think anything above 2 or 2.5 is a very good strategy. So that was my track record. Now I want to show you a track record that goes back even further. This one is Finbo Multi-Strategy. So this is a actual hedge fund. I believe this guy is at the top of the Darwinex leaderboard, or he has like the longest track record, but I definitely found him on Darwinex, and now he's running a real hedge fund. So this is like a very profitable hedge fund. Most hedge funds cannot beat the S&P 500. They're not worth investing into, but this one is pretty good. These guys are making some really good money. If you want to know more, just put in Finbo Multi-Strategy and it should take you to their website. I'll also leave a link in the description of this video, but this is what you want to see. So this is the performance of this fund from 2017. Okay, so if we zoom in a little bit right here, this should give you an idea that you can make money in trading Forex. I know at some points in my trading career, I just did not believe that you can make any money because I saw loads of scammers and people losing money left and right. But this should give you a clear picture that it's possible to make some good money in Forex if you know what you're doing. So all the way from 2017 to 2024, they had one negative year, and it's normal. It's gonna happen. Like, you don't see it online because everyone is showing you that every single month they're profitable and they're making tens, hundreds of thousands of dollars. Well, this is the reality. You can make money, but it's not a fairy tale like you see online. So 2018, they were negative, -1%, but 2017, +30, 2019, +28, 21, +27, 2022, massive year. It was a massively trending year, +56, 23, +37, and 2024, a bit of a slower year, not gonna lie, but they are still profitable at +4.5%. And here's the total, +480%. I don't think this is compounded. I think these results are uncompounded. Not sure about it, but still very good results. If these are uncompounded, these are absolutely awesome. And here you can see some stats as well. So you have the max drawdown. They have a better max drawdown than me. They have -13.27%. Sharp ratio plus or just 1.75. Average trade duration, does this ring a bell? Mine is 8 hours, theirs is 10 hours. So swing trading, highly profitable. Yes, I would definitely say it is. And I do think this guy has like 300 million under management. I do think in Darwinex, this guy does manage like $300 million because this is like a real hedge fund. And here you can compare the results from, and this is exactly what I was talking about, the performance of this fund compared to all of the other ones. So this is the S&P. So they have beat the S&P, like the Finbo fund is this one, the blue one, and it's all the way up here. All of these other ones, S&P, NASDAQ, even the hedge fund index, right? So most hedge funds make around 10% per year on average without the fees. When they take the fee, it's even less. So one of these lines is the Barclay hedge fund index, and you can see Finbo beat the Barclay hedge fund by a lot. Okay, so that is a very good sign. And of course, they beat the S&P. So if you know how to trade, if you want to learn how to trade, you can be very profitable and you can make a lot more money than just investing in the S&P 500, right? So you can manage your own money, you can make more than the S&P, and you can make more than putting your money in just some sort of a hedge fund. That is why this skill is very valuable for anyone that does want to learn it. So yeah, that's about it for this segment. I hope this served as a motivation for any beginner trader out there that you can make money, okay? It is possible to make money, but it's not a fairy tale. You're gonna have losing months, you're gonna have losing years, You're gonna have drawdown periods, but if you stick through it, if you have a proven trading edge, well then you can consistently extract money from the markets and you can extract some very good sums. And that would be it for this video, guys. Hope you enjoyed, hope you took some value. Again, I'm only showing you realistic results in trading. It is not what these gurus online want you to see. So they want you to see 10% per month, 20% per month, and very consistent, huge returns every single month. That's impossible, okay? I mean, if it was possible, the hedge funds would not be making 10 to 12% per year. So you just need to know what is realistic, what is possible, and then you can decide if trading is for you. Of course, it takes a lot of time to learn to trade, but once you do learn it, you can make a lot of money and you can basically invest into yourself. So instead of giving someone else your money like a hedge fund or putting it in the S&P, you can actually invest your own money and you can make even more percentage because you can be maybe more aggressive on trades. You can risk more on the better trades. You're going to have a lot more confidence if you're investing into your fund that you're running than when you're putting it in a hedge fund or let's say the S&P 500. So if this is for you, if you want to learn to trade, if you saw the realistic side of trading and if you do not want to get rich quickly, instead you want to get rich slowly, well then go to zentumtrading.com. You have free mentors at your disposal. You have Griff, you have Nico. Both of those guys had a lot of payouts with prop firms. They have a good long track record as well, and you have me as the third mentor, so we help you to get from zero to consistently profitable, get prop firm payouts, crush your goals. But it's gonna take effort, it's gonna take hard work, and it's gonna take some time for you to become consistently profitable. It's like getting a college degree, you could say. So you wouldn't expect to know how to, let's say, build a car with just 1 or 2 months of courses. It takes 5 years to get a mechanical engineering degree. It's kind of the same with trading. It's like a college degree. It takes a few years to learn, but once you learn it, it is a highly, highly valuable skill. So hope you guys enjoyed, and I will see you guys in the next one.